for watching The Close here on BNN Bloomberg. Our next guest is Eric Lascelles, a familiar face and a leading Canadian economist. He's chief economist at RBC Global Asset Management. Eric, thanks a lot for joining us. It wasn't that long ago that we saw some much stronger economic growth numbers in Canada than we expected. Those were fourth quarter numbers. What is the outlook now that 25% U.S. tariffs have become a reality?
Yeah, I mean, thanks so much for having me, Paul. You're quite right. The Canadian economic momentum had been quite strong. The fourth quarter was good. We were seeing some pretty solid figures early in 2025 as well. And in theory, that all abruptly changes going forward, given these enormous tariffs. And no one can quite agree on the precise damage and the precise timing. But the general consensus and consistent with our work is this is a big problem for Canada. This is a recession-sized problem. And there is likely to be a period of economic decline in the country. And I would think it happens fairly quickly as these tariffs are applied. And so that's the situation that we're in right now. It's a pretty radically altered near-term outlook. And to the extent so much of it is a function of White House tariff decisions, there's not really a whole lot of flexibility on the Canadian side. Clearly some scope for Bank of Canada help, clearly some scope for fiscal help as well, but that can only get you so far.
Do I hear you forecasting a recession in the near term? Some of your peers in the Canadian economist community are doing that. You referenced a recessionary challenge. Are you, in fact, calling for 2 consecutive quarters of contraction?
I think it's more likely than not if these tariffs stick. And so to some extent, that is the question that now presents itself. The question yesterday was, do we get the big tariffs? That was not certain, but that's been answered for us. The question now is, do these big tariffs stick around? If they stick around, yes, I do think it's a recession and a pretty serious one for Canada. And I would presume that we would see a decline in output in the second quarter, a pretty significant one, maybe a more moderate decline in the third quarter. That gets you your 2 quarters, if that's your definition, and a pretty sluggish period thereafter as well, to be perfectly frank. But again, to circle around to the big question, the question is whether these tariffs stick around. We don't know that with certain. Either way, so long as they're here, it is going to be quite painful, and presumably there is going to be some economic decline. But I guess there are scenarios in which these tariffs are lifted, and it's literally anyone's guess tomorrow, next week, next month, next quarter, next year. But at some point, it is possible these are lifted, and you would then unwind a lot of the damage, and you'd be able to look back and gauge that there had been a period of softness, but maybe not quite on the order of a recession. Call me an optimist. I am still maybe slightly inclined to think these prove temporary as opposed to permanent, but not by a whole lot. And of course, there is this very, very real scenario in which they do just stick around. And as we heard recently, even a scenario in which there are some escalations, which could make this even more severe.
The fixed income market now believes there's a strong majority chance that the Bank of Canada cuts its benchmark rate on March the 12th. What do you see for the Bank of Canada for the rest of 2025?
Yeah, I mean, for one, I would agree with that sentiment. And I think if there's a debate to be had, the debate is whether it should be a 25 or a 50 basis point move. And I don't think the market's fully thinking in that direction. And we'll see. I think maybe the argument in favor is certainly a recession type impulse is more than enough to justify 25 basis points plus of further cutting. The complication is the tariffs could disappear a week later, and then you're left maybe with not a perfect monetary policy position. And so I would have some sympathy if they take this slow, but I think you should be debating whether it should be even faster than that. And gosh, I mean, in a recession scenario, I don't know why we're talking about numbers in the 2s. You should be talking about numbers in the 1s in any event. And so you would think there could be room for an awful lot of cutting. I don't think all the way down to the 0s of old that were once the sort of response that might have been appropriate in a recession outcome, but nevertheless to a point of significant stimulus. And I think that would be into a 1-point-something% kind of range if the tariffs stick.
And you mentioned fiscal assistance to the economy as well, with the proviso that it, like Bank of Canada cuts, can only help so much. But what might we expect here on the fiscal front? Are we headed, do you think, for a pandemic-style response?
Well, I'm hoping it's not quite that big, in part because I'm hoping that the damage isn't quite that large, and some lessons perhaps have been learned in terms of overdoing it or being too broad, as might have been the case with the pandemic. But we did hear from the Prime Minister, and so what I took from that was that employment insurance programs would be broadened in a number of ways that would capture, I guess, a larger fraction of workers who were adversely affected by tariffs in the near term, and then some measure of targeted support for businesses. And of course, the question would be, how do you gauge who deserves something and who doesn't, and how fully is that support provided? And so it could be enormous. I'm inclined to think it's at a minimum large if the tariffs stick around, which is, again, is that $1 trillion question, to a point that does very much move the needle in terms of the size of the Canadian deficit and the size of the debt as well. Canada happens to be in a relatively favorable position in not having a deficit that's as large as the likes of the US or even some European countries. And so there is actually some fiscal space in terms of doing some work here. But nevertheless, it's a tricky time politically with a government that's prorogued and potentially a new prime minister, a Liberal leader in the span of the next week or not. I heard a bit of confusion on that front recently that I'm not the final authority on, but it's a tricky time without Parliament to pass a significant amount of fiscal stimulus. And so I'm curious whether the prorogation ends early or whether there's some sort of effort made before an election call. But it's a trickier situation than normal. And so there is certainly the potential need for significant support, though, again, I'm hoping maybe not quite on the scale of the pandemic, which had some lasting undesirable effects, I thought.
Eric, thank you very much for joining us this afternoon. Eric